Welcome to another episode of Industry Leader Insights, where we sit down with the people who are shaping the future of the reverse mortgage industry. I'm Andrew Montesi. Our guest today is someone that you probably know. He's played a key role in the industry for almost 2 decades. John Lunde is the founder and president of Reverse Market Insight, one of the pioneers of reverse mortgage market intelligence, analytics, and technology solutions. In this conversation, we take a step back and look at the bigger picture. We talk about the major trends that John has observed across almost 20 years of reverse mortgage data, the past, present, and future of the industry, the biggest mistakes that mortgage professionals make when interpreting market data, and what the next generation of reverse mortgage businesses should be doing when it comes to technology, systems, and data. If you're looking to get a better understanding of where the industry has been and where it's heading, I think you're going to get a lot out of this conversation. Let's jump in. John, thanks for joining me.
Yeah, I appreciate you having me, and nice to meet you. I know it's I've seen your name around here, but it's a pleasure finally getting a chance to talk direct.
Great to connect. Yeah, I'm a fresh face and a fresh accent around these places.
Yeah, mix it up a little bit.
Yeah, that's right. So, John, I mean, you've been collecting reverse mortgage data, almost 20 years now. Start really broadly, looking back across those decades. What are some of the biggest stories that the data has told about the industry?
Well, I mean, most of the time when people are asking me that question, they're really talking about the origination data. And, I think on the origination data, there's 2 really big, easy stories there. One of them is disappointing, I guess. There's no other real way to describe it. Origination volumes aren't anywhere near where they were 20 years ago. And there's a lot of reasons for that. Primarily, in my opinion, we lost a lot of distribution when a couple of the big banks got out in the wake of the, housing crash back in the first decade of the millennia. And, we really haven't recovered from that. I do think we're starting to see some additional distribution and participation. The whole mortgage industry has changed so much on the forward side, which we're just, kind of a small part of, moving from banks to non-banks. So I think it's very easy to see in hindsight that, those big banks getting out of the reverse mortgage space was not about them getting out of reverse mortgage so much as, curtailing their entire mortgage exposure. So, that's definitely the top line. I think the second one on the origination side is simply, there's very little transparency or visibility into the non-HECM side of the industry. And that's becoming more and more part of the origination story these days. If you look at kind of the way the products sit today, for the past year or so, we've really seen for the first time that the proprietary products have moved from being kind of a jumbo product where the only time they really competed with HECM was when the home value was higher than the lending limits on the HECM product. That's just not the case anymore. There's a lot of times where head-to-head, the proprietary product will give, additional cash availability, at closing and, that's just a little bit of a different world. And I think we're still continuing to adjust and see volume adapt, find the new level between proprietary products and HECM in light of that shift that happened last year. But I think the third big story that tends to get lost or missed because most people do focus on the origination side is really, if you look at the servicing side, we've been several consecutive years now of the total number of loans outstanding on the HECM side. But the story doesn't change if you add the proprietary into the mix, in my opinion. The total number of borrowers, households with a reverse mortgage outstanding has been going down at a fairly good clip for the last several years in a row. And that's just a function of two things primarily. Number one, obviously the anemic origination volume. We're at a fraction of what we were 20 years ago, to your point. And then number two, even for the recent past, the highest origination volume years, have had disproportionate refinance kind of volumes. And so that's not a new customer for the industry. We're, simply replacing an existing loan with a new one. And so, as we continue to see the portfolio age, they're paying off, they're, getting assigned to FHA, all of those kind of things. And so, I think that's been a very important and I think underappreciated part of the story as well. We really need to get back to a situation where we're serving more customers every year instead of a declining number of customers every year.
Yeah, some really good points there. I think it kind of flows into my next question, which is around, everything that's happened over the journey, over this period, this 20-year period that I guess I'm talking about is GFC, COVID. We've had historic home equity growth, rising rates, changing demographics. You've obviously mentioned the significant drop off. What has remained, though, remarkably consistent that you've seen in the data over that time period?
Yeah, and this one's not so much a data, a data illustration as much as something that I believe, having looked at the data for a long time, is simply that the product remains very understood, misunderstood, or simply underappreciated for what it can do. I think the industry has been talking about for over 20 years now, the baby boom, demographic kind of shifting into the age eligible window and creating, 10,000 new additional potential customers every day. That's been true for, again, almost 20 years now. And it really didn't change the landscape for the industry that much. And I think that is largely a function of the lack of appreciation and understanding for the product. And, that was true when I got into the industry, 23 years ago. And, I think it tells us just how big that hill is to climb. But I do think having more companies, more loan officers get the basic understanding, having some of those tools and learnings in place where, more companies can understand and appreciate just when the situation is appropriate and when it's the right answer product wise for a customer situation. I think that would be a lot of progress in the industry.
Yeah, it's really interesting. It is the common issue that continues to come up in these conversations that I'm having. So, yeah, it's certainly the challenge remains ahead for the industry. But I guess from more of a positive perspective, as someone who's been in this space for quite some time, if you were to look at the data and the charts and go, I'm going to show you something to represent that, the future is actually bright. There is opportunity here. There's an open door here. What would you choose and what story does it tell?
I think I'll pivot right back to, I think the demographic and, the total market opportunity numbers have suggested for the last several decades that there's tremendous opportunity here. I don't think there's anything wrong with that part of the story. I think it's, how are we going to go out and capture that? How can we do something a little different so we're not 2 decades from now still talking about how unrealized the opportunity is? And I think that's a function of, looking at the industry with a clear set of, understanding what's been happening for the past several years and, what can change that dynamic. How can we get the product in front of more consumers? And to my mind, that really means we probably need to get the product in a clearer, simpler, easier to understand form in front of the loan officers and whoever is putting that product in front of the consumers. Because at the end of the day, if you think about any other product or service, if the guy that is responsible for explaining it to the customer doesn't trust it or doesn't understand it at some basic level, they just won't talk about it, right? And so I think that's where the industry can do a lot better. And I think the industry is moving that direction in a lot of ways. So, we're trying to do our part with some of the tools and the ways we partner with our clients on that front, whether it's technology or just providing things that really try to cut to the heart of, hey, why is this loan, why is this product the right answer in this situation, right? It's ultimately about, it's a mortgage loan, so it's providing, equity and liquidity on part of that equity in a structure that makes sense. For somebody who might be looking for cash flow, they're not necessarily looking to create a new obligation every month going out the door. They're looking either for an infusion or a line of credit kind of liquidity. But again, a traditional HELOC doesn't do that without creating a new obligation every month that they have to pay. So, the product remains very well positioned to satisfy that. And I think it's really just a matter of being able to boil that down and present it in a way to the customer, but also I think to loan officers that aren't as familiar with it, and give it to them in a way that is easy to digest and then explain to their customer.
Yeah, for sure. It's certainly I've heard that a few times in my conversations that, the lack of understanding within the industry is the first barrier to get over before we can think about consumers. So, certainly an interesting one there. Now, what about, I guess maybe flowing on from that in terms of, loan officers and how they operate their businesses and talk about the products? There's also the interpretation of data. And, even with the people that I talk to, people are seeing different things and responding differently to the numbers and the information in front of them. What are some of the mistakes or challenges that you've seen, some industry professionals make when it comes to interpreting data, and what do the best performers typically do differently?
Yeah, I think at the end of the day, and I'm a very biased person to answer this question because that's what we do, right? But we're very focused on helping our clients understand their local market, wherever they're looking to be the local expert on reverse mortgages, whether that's, to other partners, whether they're other loan officers in the area, bank branches, elder care attorneys, anybody else that's interacting with the same customers that you're looking for. That's the kind of information and data that we try to help arm our clients with so that they can then use that, understand it, give it to them in an easy to digest way. And then they can then convey that to these other professionals in their area. We're really excited about, since last year, we brought out a new product called our Reverse Qualifier, which is really about answering the three most important questions, when you get to the actual sales conversation. And it's really a point of sale tool that helps people say, hey, is this customer, is this an appropriate customer for a reverse mortgage? What's the benefit for them? And being able to illustrate that in a, again, simple, easy to digest way. And then last but not least, like, hey, does this loan work for the company, right? Like, nobody's going to keep making loans if they're doing it at a loss. So we're able to answer all those questions for our clients and do it in a technology solution that just puts all of that at their fingertips, makes them very flexible and able to tailor and structure the loan properly for the customer, and maximize the benefit for them. So, I think that's a great solution that we've been really excited to have our clients, kind of take out into the market. And it's been it's been an awesome journey to just see how people go use tools, right? Like, anytime you put software out in the world, it's, you have your idea of like how you think it's going to get used and you build it, and then you get good, feedback, and they'll tell you to go this way, go that way, whatever. And so we're very fortunate to have, had several iterations on that now, and pretty excited about some of the stuff that's coming. We've been able to put some of those proprietary products into the tool this year, and So yeah, it's been a great journey and pretty exciting to see. But at the end of the day, when it comes to how can you be the expert and really succeed in the industry, it is about, knowing the product, knowing your local market, being able to be that local expert and, give the confidence to whether it's your business partners, realtors, attorneys, like I said, but also at the end of the day, your customer, right? They need to believe that you're the right person to take this step with. And, it is a big financial product and financial decision. So you always want to inspire confidence in your customer there.
Now, I guess connected to that, I've been thinking a lot about, what the next gen reverse mortgage business looks like. If you were starting from scratch today as a loan officer, how would you set up in terms of data, tech, reporting capabilities? What are the sort of things you would personally look at putting in place from day one?
Yeah, I think, again, I'm pretty biased. I think you should probably call us first and we can help set you up with some of those tools that I've been talking about. But I think also from not just a loan officer perspective, there's so much that happens on the back end of the loan in terms of making sure that you're not, you can make money when you create the loan, and then in servicing, you can lose more money than you ever made when you created the loan. So it's one of those things that you really need to have an appropriate focus at every step of the journey, because this is not a, kind of a one-off transaction. This is the establishment of a pretty lengthy relationship with the customer over time, and particularly in servicing. And then there are quite a number of things that from a customer and borrower perspective are invisible, but from the owner, the servicer, the investor perspective, make all the difference in the world. And so those are some of the things where, people getting into the business, particularly from kind of a company and the larger company perspective, that's really where we try to help spend some time up front with them, make sure that they're completely aware of all of those details and how they can mitigate some of the risks on the back end and put in place the appropriate systems and have the right folks advising them so that they don't, run into issues down the road.
Yeah, for sure. It certainly seems like some people would be underestimating exactly what's involved in terms of, setting up the tech side. I just think from my perspective with Reverse Focus, all the steps in place from brand, website, CRM, then you've got the actual, processing process. And then there's the whole back end that you're mentioning. It's requires quite a strategy, that's for sure.
Yeah. And a lot of coordination to your point along the way, right? So the CRM happens usually before the point of sale, which is, one of the things that we have a system for, but then that goes directly to the loan origination system. So, and then from there it goes to the servicing system where again, we play a role on that side. So it's that coordination and link up, make sure all those systems are appropriately talking to each other. And that's easier than ever in a lot of ways today with the technology stacks that are available. But, there's still a pretty significant coordination and communication effort. And really somebody needs to own every one of those steps and transitions to make sure things aren't falling through the cracks.
Great advice and insights, John. Thank you so much for your time on HECM World, and I look forward to getting you back and we can dig into some of these topics a little bit deeper.
Yeah, this has been a good first conversation here, and look forward to chatting again in the future.